I wanted to welcome everyone back to another premium session, the first for 2024. Been a good break for myself. I hope it's been a good break for everyone else as well, to recharge your batteries and get to spend some time with their loved ones and friends, and just to take a bit of a break from life, from work, from trading, from everything. I've definitely enjoyed it, but the markets don't stop, as we know. So we need to do a bit of a catch up as to what's happened. Particularly in the crypto space, we've seen ETFs. In traditional finance, we've seen all-time highs get broken, leading into the end of the year, and likely to be broken in some other markets in the start of the year. Um, So yeah, just want to go over some of that stuff. I'll just get my screen sharing. May as well start with Bitcoin, given that it's had the most hype. I'll go into a chart that's a little less messy. All right, so we've had a decent pump up to around 48.5K at the start of this month. It was when we had the fake ETF news. Um, Pumped up, came back down pretty pretty solidly and fairly convincingly. Um, but prior to that, we had the yearly close and monthly close, and that is this candle here. Something that I've been talking about is this 50% level sitting at around 42,265. It's different on all the charts by a few dollars. This is the index chart that we're looking at here, and we closed right on the button, right on it. And I've been talking about this level for quite some time. My theory is that we don't close um, above this 50% level on a monthly time frame until after the halving. And whilst on some charts we did slightly close above it by like $10, on other charts we closed um, below it, some over, some under. I'd say that I'm more in the part of saying that it's still history still repeating, um, as opposed to a convincing close above it, at 45K or something like that. And we did have all that ETF stuff that was coming out as well I think it was a week or two after the yearly close, which did help the price action hold up a bit. I'm more interested to see where January ends up. I think, but based on these candles, like this is quite a bearish candle. This one here, where we did come up, tap the 618, and it was a strong, extremely strong rejection, and it hasn't really recovered since. Um, I'm more interested in seeing how January plays out. I think we're going to be closing a bit more convincingly below the 50% level. If that is the case, I'm more inclined to suggest that history is going to repeat, where we can't get a monthly close above this level until after the halving. And there is also another interesting thing here as well, and that is, and I haven't really noticed it until I posted this in the premium server the other week. That was that this run down into the lows where we form the low down here. This run down looks awfully similar to how this works here, to our run up that we've had from 24K. And what we can see is we ran down, we had a very small consolidation period before it continued. Over here, we've had the run up, very small consolidation period before it continued. But then once we did get down here to 17K, we saw a relief rally of about $8,000, almost almost a 50% gain from the low. So I think that we could have something sort of similar play out over here, and it looks like it's starting to already, albeit a little bit earlier on, or maybe a third of the way through. But we could start to see this happen over here, but in reverse, where it starts to sort of have a relief sell-off and come down into perhaps sub 40k down to about 35k before we start to see some continuation, or perhaps maybe another challenge at this 50% level and a bit more sideways, until we sort of reach the timeline of being ready to break that level and hold it broken on a monthly view frame. As we can see, this fib that's drawn with the 50% and the 618, that is basically, it's just a fib drawn from the all-time high to the cycle low, and that's what's given it to us. There's been a lot of trading happening at the 50% level, but this 618 was highly respected and heavily rejected, which is what we want to see. It lines up with what's happened previously in the last two cycles, and I think this trend is going to continue. But coming down to lower time frames, so that's the rejection there. We can have a look and see why did it stop dead down here. We'll just draw a fib, see what's going on. So, I'm just going to jump into the Bybit chart. The Bybit chart's cleaner for technical analysis. It is also a bit more messy. I'll try to clean it up a little bit. Get that one there. So any time we've sort of come down below 42k, it's been getting bought up pretty quickly. You can see there's hardly any bodies of candles sitting below the 50% level, but it's starting to weaken, and we're starting to see longer red bodies over the past few weeks, and the volume is also increasing. This sort of indicates that this is a distribution zone, and we're likely to come back down. But what would be considered a floor price? I suppose that's probably what we want to look at. I just don't want to play around with that chart too much. But we'll come back over to here. So if we go out to a monthly view, at the current time, and I actually think when we were back over here, I was doing some projections of what I think could happen if we did get up here. 32K is the all-time low to the current high, 50% level. I don't think we're going to see any significant closes below 32K. There is people that are calling for 25K, for 10K. I've even seen. I think it's crap. It's not going to happen unless there is some nukes getting dropped out of the skies or something to that effect. I honestly can't see it happening. We could come down and test 32K. More unlikely than likely. And we can also move the fib over to a more likely scenario. So now I've just got it over to this low here from the prior cycle that we had, or mini cycle as I like to call them. And this gives us something a bit more realistic. Holding 37K is fairly key. 50% level, I think it's likely to get touched. Where I'd be more interested in the price going is to this 33 to 34K region. That's going to be a very good position to day trade, to take a long on the perps, if we get down there. But this also will create an excellent buying opportunity and perhaps a last decent buying opportunity to get into one, Bitcoin, and two, more importantly, alts. We're starting to see the dominance is starting to get a bit of volatility about it. We've been seeing up only for quite some time now, but now we're starting to see some fairly big drops and some quick rises in it. So I think it's starting to tell us that we're starting to get to the top end of where the dominance is going to go. And we can get into that and just have a quick look. So this is on a monthly chart still. As we can see, we've been virtually up only for the entirety of 2023. And now we're starting to get some rejections, and we're leaving wicks behind as well. Can it still go up? Yep, it sure can. This is my target zone of where I think it will top out. Doesn't have to get there. I'm not trading in hoping that it gets there or waiting for it to get there. That's just where my little target zone is. We can see that in prior cycles. So I think the halving was somewhere around. Oh, we'll have a quick look. So halving was in May 2020. So that puts it around here. And then these are the months leading into the halving. So the BTC dominance was going up. And then in the months leading into the halving, we had a pullback, which continued. And then we came up and formed a double top. So looking at this, we may not get up to 57% until well and truly after the halving, which would put it around the end of the year, around November. So we may just see this slight sideways to downtrend occurring, which is going to give us a bit of an alt season. There's going to be wicks to the upside until the end of the year, when we have the final capitulation of the Bitcoin dominance. So I don't really want to be buying alts in this period after the halving. That's for sure. Because if we go and look at a Bitcoin chart, Bitcoin's broken past the 50% level at this point, this low point here. And you don't, and that would suggest that alts have also had a run as well, and you're going to be getting into them too late. I think we're in a pretty prime spot over the next 2-3 months to be getting our final alt positions and all, pretty much just deploying all the dry powder that we have left or that we've accumulated. I've still got a bit. I've still got alts that I want to get into. I'm just sort of waiting for the right price to jump into them. We'll jump in and have a look at Sweat because it's been interesting how it's been playing out. So I did post up some TA regarding Sweat in the server. We'll just backtrack a little bit, I suppose. We did have the breakout, which was on some very decent volume and was fairly exciting. Interestingly, whilst it was a massive pump, stopped dead at the 786, and then it's fallen back into the channel ever since, and it's slowly been on a bleed off since that happened. I think we were back just here. It was before this capitulation happened. We're only just underneath the midpoint of the channel, and I posted up in the premium that I felt this zone down here was a buy zone. It was sweeping this low, but holding this low at 0.0085. Lo and behold, capitulated into the zone, came down to 0.0089, which was a bit lower than what I thought, but it got bought up very quickly and had a nice bounce. We've since been bleeding off again, but if we look down the bottom at the volume bars, the volume's declining, and we're coming back into that buy zone. I think we may look to see a bounce, probably around 0094, something to that effect. I can actually just draw a quick fib, see if there's any confluences down here. Okay, I've got fibs on top of fibs here, but bear with me. So at the moment, this 786 has provided a little bit of a bounce. I'd say nothing convincing at this stage. We can still come down a bit more. As long as we don't start falling below this wick now, we don't want to see that happen. But we can come down anywhere within this wick. I've done a lot of discussion around filling of wicks, filling 50%, at least 50% of wicks. We can see where that leaves us. I'm just using the fib tool to give us a 50% level. So that puts us at around 9313. I'd expect at least that level to get reached based on filling wick theory, which would be fine. It just maintains that this is definitely a buy zone, and if it holds, it's unlikely to get revisited. But what we don't want to see is this low get broken. This low gets broken, you can bet your money that we're going to be coming down to test this low here, which we really we don't want to see that tested. If we were to, then we're going to come down and we're going to start testing some of these areas down here potentially, and these tops. I mean, if you want to get into, if you still want to chuck a fair bit of money into Sweat, it does provide a good buying opportunity, but it just means that we're going to be going lower for longer, into another accumulation phase, and it's just going to slow the whole process for Sweat. We may not see the massive gains of what we would like to see, But time will tell. We shouldn't be fearful at this point. We're down here on low volume. We've identified that this is a buy zone, so we're here. If we want to buy, now's the time, more or less. That's what I'm trying to say. A bit like when we're at the tops. Not that I'm selling at this point, but if I was a seller, if I was a day trader on the spot market, which I'm not, I would have definitely been selling up here. But it's easy to talk about it. Once we get there, you start to get the feelings start coming in, and those feelings will be, oh, it can go higher. Maybe we'll go to 0.02, and then you don't end up selling, and it starts to sell off, and you get down here, and you might be up 10% in your portfolio, and you're like, oh, I think it's going to keep going down, and you end up selling down here, and then it has a bounce, and you're like, oh shit, it's going to take off again. Better get back in the market. And that's how a lot of retail end up getting wrecked, because they start trading on those emotions. So if you do have a plan, you need to identify it early and then execute. So if I was a trader, I would have sold some at the 618, and I would have sold some at the 786, no doubt about it. And then identify these points, fill your bags. I've already got a full bag. I don't need to add more. But if I didn't have a full bag, I'd be buying more down here. That's where we are with sweat. Now we can have a look at NASDAQ. Do a little bit of traditional finance, I think. Go out to a weekly. So as we can see, this was the all-time high set in November 21. And we did leave the run late, but we got there in the second last week of December, broke through the all-time high. This is just going to continue going. We're going to see some sell-offs along the way, don't get me wrong, but ultimately, trend is going to be up. We're in a presidential year. The things are bullish. The inflation is down. Recession risk for me is not there. There's been recessions being called every year for the last 4 years, and besides what happened during COVID, there really hasn't been a recession. I think we're going to see the narrative is going to start turning now that we have made all-time highs. It's going to be starting to turn to, we have to get into the markets. They're just going up, even though they have been for quite some time. But that's what we're going to start seeing filtering into the news. The NASDAQ, there's nothing more to really say except it's going to the plan, and it's moving quickly. It's moving quickly. SPX, it still hasn't passed the all-time high. We've had the highest weekly close, 47.83, but we haven't wicked to an all-time high just yet. It's going to come, and it'll come in the first quarter, I believe. But it's not far away. Again, it's been a fairly consistent run up. We did have that 3-month pullback that was eliminated within 4 weeks, or fully bought back within 4 weeks. Very strong. US markets are strong. They lead the world. I expect other economies to start following. So UK 100 or FTSE, last all-time high that it made was in Feb last year. It'll break it again this year. obviously this is my opinion. I don't have the crystal ball, and I haven't come from the future. But I think it's going to break it probably around the middle of the year would be my guess. The US will lead, and then the rest will follow. We are seeing a bit of a sell-off at the moment across the markets, but it's just a normal natural correction. Uh, SPY's down nearly 1%. NASDAQ's down just over 1%. But if we look back 2 months ago, we weren't even looking at 4,700 points on the SPX. So to see a pullback 1%, and we're still at a level that we haven't seen, it's just the ebbs and flow of the market. One that is a bit concerning is the Chinese market, because it's struggling to hold on to some of these levels, and it's just been consistently selling off. I do think it's going to have a bounce of some sort. This is almost a bit of a last hurrah down here at 14,600 points, which we're not far away from. Don't want to see that broken if you're invested in the HSI. I'm in an Asian ETF, top 50 companies in Asia. So I do have exposure to this market. I have bought into it a little bit more only yesterday, increased my exposure. I started DCAing into this ETF back probably around, this is a speculation portfolio that I've got, and I've been DCAing this entire period, but on the dips, I've been increasing the size, particularly once we got down to around 17,000 points. When we got down into this zone here, I significantly increased my exposure to this ETF that I've got, and I think I've increased it by about 15% yesterday. My exposure in this ETF. The reason being is China's in a deflationary environment. They're printing money. I think last year they printed $1 trillion US, and I don't expect that to ease up. So when the money printers are on, we saw it with COVID. Markets completely tanked. The printers got turned on to full power, and it was a matter of time before that printed money turned into some action on their markets. So that's why I'm quite bullish on China on the longer term, but I am also being a little bit cautious that don't want to see this level at 14,600 get broken. But from an upside perspective, there is a lot of upside. If we look at where the all-time high sits, it's around 33,000 points. We're a long way off that. We're not anywhere near all-time high territory. So before we even get to all-time high territory, you've still got this entire structure to work through. And with how it's been pulling down, it looks like to me that there's sort of two major key levels at 18,500 points, which maybe if I look at it on a monthly time frame, it looks better. Yeah, so around here, 18,500 points was proven as support, and then we got some support in here as well. And then the other one is also this 50% level, proven as support, proven as resistance. But outside of those levels, it seems to have little strength, little support or resistance. Like you could argue that around 25,000 points has been support and resistance as well. But I wouldn't say it's as key as what 18.5 and 22K are. But when it moves, it moves in relatively in straight lines. We saw this run up here, all green, runs down, all red. You don't see too much interchanging of the colours where it goes green, red, green, red. This run down was pretty big red. The last few months have been all red. We're coming due for a bit of a turn. Might just jump into Discord here. Was there any questions that you had, John? Or anything that you wanted me to look at specifically?
Nothing from me, no.
Yeah, no worries. All right, so we'll just go over my crystal balling for Bitcoin for 2024. But I was doing some research as to how things have worked out historically. We already did touch on this a little bit. But the all-time high, the 50% level that we're currently trying to get a monthly close above, historically waited until three to 4 months after the halving before it was able to get a monthly close above that level. So that sort of puts us at around July to August, which is quite a while away. It could come a bit sooner. Like, it doesn't have to be 3 or 4 months. It could be 2 months, could be 1 month, but it is unlikely to be before April. And when it does happen, that sort of will lead us into. It'll give us an idea of when could we break the all-time high. If it was to take longer, then I'd say the all-time high getting broken maybe sooner. Although I do like how it does sort of line up. So if we said around June, July, I think it's going to be slightly earlier. I'd say June, July. I think it's going to break that 50% level and close above it. And so then we look to the all-time high. And the prior two cycles, they took 7 and 9 months respectively from the halving to break that all-time high. And so then that, using those two figures, that puts us between November and January. I definitely am starting to lean a lot more towards closer to November, even perhaps October. Reason being is we've got the presidential election will be in November, and markets typically pump into that event. Whoever's sitting in the hot seat, they want to be re-elected, or they want their whether it's Democrats or Republicans, whoever's sitting in that seat, they want the markets to be healthy. They want people to be happy, and they want the people that influence, or companies that influence voters, being happy as well, so they can hopefully vote in the direction of the people that are in the hot seat. So to do that, they try to have the markets in as good a shape as possible. So I'm expecting the US stock markets, traditional finance, to be going up around that time, November, late October, November, and I think Bitcoin could break its all-time high at around that time. And I think I'd say that it's a fairly, as we know in crypto, anything can happen, but as far as crypto goes, I'd say it's a high probability of it happening. Outside of that, I'm going to be running some testing on exchanges over the next few weeks. I have been doing some small testing, or maybe not testing as such, but comparisons between the exchanges that I've listed there, being MEXC, Bybit, BitGet, KuCoin, and BingX. At the moment, this is very preliminary, but I'm inclined to say that Bybit, MEXC, and BingX are the three that I would recommend personally to friends or family. And I'll put in some more. I'll put some details together and put a post up as to why that is and what it is that I've found. But besides that, I think that might draw us to a close for now. Next week, I'm actually heading away for work, so it's not a bad thing. It frees me up to hold sessions at different times. We've got the general catch up on Monday. I'll probably try do a premium session maybe around lunchtime or so, UK time, on either Tuesday or Wednesday. And we may try do another one on Wednesday night. Sorry, I'm getting mixed up with the time zones here. So we might do a premium session on Tuesday lunchtime, and then another premium session Wednesday night. We'll just see how we're going. I have been talking with Simon. He's keen to do a session as well, just to show how he day trades and his techniques, just to sort of show another example of there isn't a one size fits all. Different people trade differently, using different techniques, using different technical analysis, or no technical analysis. They may use fundamental analysis. And yeah, it'll be great to see Simon in action with his own strategy and what it is that he does. So we'll be looking to tee that up either next week or the week after, I believe. They're very excited for that. Yeah, thanks for joining, John. Hope that you've had a great break and that you've been getting some valuable information out of the premium server that we've got here.
Yeah, definitely. It's pretty helpful. I appreciate it. Thanks for the catch up.
No worries, mate. Well, I'll give you your evening back, and yeah, we'll catch up next week.